The Fort Collins real estate market for November of 2025, looking at data from October. We're going to jump right in, but we're going to look at median sales price, days on market, inventory, new listings, homes that have sold, homes that are under contract. We are also going to look at one thing that I think is really a question we get asked often from almost all of our clients, which is, what should we offer? And I'll go into detail about that here shortly, what our theories are and kind of strategies. But jumping right in, if you are watching this or listening to this, our YouTube channel, Fort Collins Lifestyle, which is a newer YouTube channel that is going to host our lives, our market updates, our in-person podcast that's coming January or February of 2026, depends on when the studio gets fully built out, but our visuals will be all hosted on YouTube. So I'm going to share my screen here and we will jump right into it. Median sales price across the board is up. We are up. Oh, I'm going to do that so that we don't get disturbed. We are up. There we go. We are up across the board. Now, this is looking at both attached and detached dwellings. We usually look at specifically detached dwellings, but for today's purposes, we will look at attached. Now, one thing I want to look at is the rolling 12 months. You know, again, kind of up across the board, but relatively flat line, especially when you look at the 5-year. 5-year, we had a run up in 2020, 2021, flatlined since essentially the end of 2022, which has been good. You know, we've had incomes hopefully being able to boost a little bit and try to stick with the rising prices and affordability. So we are seeing interest rates drop a little bit. They were plummeting for about 2 weeks. We saw interest rates from mortgage brokers in the mid to high 5s, as well as from retail lenders in the low 6s, which is definitely something that the market has been waiting for. So we'll see if those continue to drop or stay stagnant. A lot of people out there making predictions are saying that 6s are where we're going to be with interest rates for the next 2 to 3 years. So I don't think we're going to get anything too crazy below that, but we could see high 5s, low mid 5s, which will put some booster rockets on the market. Days on market, which is a leading indicator of inventory, we'll look at just 3 years. It is higher than we were last year for Denver, Colorado Springs, and Greeley, but Fort Collins is actually down a little bit. But still, you know, 46 days on market. That means 15 days before going under contract, 30 days to close from there. Denver tracks their days on market a little bit differently. So that one's kind of not skewed. It's consistent to Denver, but it is a little bit different from when Fort Collins and Greeley and Colorado Springs, when a property hits the market to when it closes, is days on market. New listings, how's inventory coming? Well, they're down a little bit in Fort Collins, 6.6% less than last year, but Greeley's much higher, and but Denver's a little bit lower, Colorado Springs a little bit higher. What is really putting a kind of pause to potentially prices coming down in any significant manner is inventory is still, you know, pretty darn low. So it's just not, you know, spiking to where, you know, we can look at month supply as probably the biggest indicator. 4.1, 3.6, 3.2. Denver's the closest to a balanced market, which is funny because at the end of this video, I'm going to talk to you guys about 2 different takes on the market from 2 of my agents, partner agents that have done a lot of deals. And a lot of them are saying, you know, it's buyer's market, more negotiation. But I think that's just perspective because for over a decade, nearly 15 years, coming into 2026, it will be for 15 years. It's been a seller's market in Fort Collins and Northern Colorado. So perspective is just this, like, we've just been fighting as buyers for over a decade. And now having some negotiation power just feels like it's a more balanced market. But technically, per months of supply, you know, being between 3 to 4 months, it's still a seller's market. It just feels more balanced, more geared towards buyers, getting to have more negotiations, you know, price reductions, concessions. We're going to look at some price reductions at different price points, as well as kind of days till offer, as well as percent from original price to final price and concessions, what that reduction is. Closed sales is also down. So like our inventory is new listings are down a little bit, but also our closed sales are down, which is interesting. I actually think we'll see when we do the November market update, we're going to actually see a little bit of a spike in closed sales, because mortgage applications, refinance applications spiked when interest rates they didn't bounce by any means, because like they're staying low sixes right now. But when they drop from mid sixes to low sixes, high fives, a lot of buyer activity, kind of hit the market. And we kind of anecdotally felt that. We had properties where we were too late to make an offer. We had a property that there was multiple offer situation. One that was on the weekend, on just for one weekend, offered full price because of that. But interest rates are a big indicator of that. One thing I wanted to look at is I actually really like this creator. His name is Nick Gurley, and he has Reventure Capital, Reventure app. He has a ton of great information, but I hate how his brand is doomsday. And as I just said at the beginning of this, video podcast, that I created a second YouTube channel specifically geared towards local Fort Collins real estate market update, local Fort Collins City Council, local Fort Collins podcasts. Well, it's because it was negatively impacting my other channel, which is geared towards a different algorithm, equation. So I actually had to open up a second entire channel, because otherwise it could impact negatively. And that's what's unfortunate about Nick's information, is it's phenomenal information, tons of great data, but he has to be a doomsdayer for YouTube to push him, which he's, my guess is based off of everything that I'm seeing, he probably makes good money off of his Reventure app, but also from YouTube ad revenue. He is not trying, that's what his goal is. So, but I did watch a recent live of his, and he was suggesting that, hey, if you're buying, not saying don't buy, it's the worst time to buy, run for the hills. He was actually saying, if you're buying, here's some ideas for you, which I appreciate. I was like, all right, man, like that's like the first time in 4 years that I've heard if you're considering buying. But if you're a buyer in today's market and you're concerned and your timeline to own this house might be only 3 to 5 years, which we are telling all of our buyers, like if you're buying, hopefully your plans are 5 or more years. Because if that's the case, yes, we are full supporting you being a buyer in this market. If it's 3 to 5 years, it's a little, you could go either way on that. But one thing that you could look at is, hey, let's see at what discount from the market do we need to be at to feel comfortable. And that would be one thing that, like, his future forecast for the next 12 months for Fort Collins is minus 5.1%. So whatever you think, you could use this as supporting data saying, hey, you know what? We believe that the Fort Collins market's actually going to drop 5%. That's why we're offering what we're offering. We believe there's headwinds that are in our way with tariffs and government shutdowns and elections, whatever you want to say, but this could be supportive data saying, we actually think that the value in 2026 could be as much as $28,000 less than it is today. But what I will say also is he has a new data set, which is his long-term growth score for Fort Collins is strong. It's a 59. And a lot of that is long-term appreciation, wealth and income, demographic growth. Our affordability, though, just scores terrible. And our valuation score as well, too. Anything, it's a 0 to 100 score. So Fort Collins, actually all of Northern Colorado, Boulder, Denver, Greeley, all score well on the long-term forecast. So if you're a long-term buyer in Fort Collins, that is a good thing. All right, the next thing I wanted to look at was specific price points for price reductions, original list price to final sales price, including concessions, and how long do they take to get that offer, and what that percent off of the original list price was. And then also just looking at kind of fun price per square foot. Our median sales price in Fort Collins for a detached house, and that's what this is looking at, is $625,000. It's been that way for about 3 years. Now, some of these numbers, as you can see, are, they drop for a total price per square foot of 153, but they can get you as high as 371. And that's a difference between, downtown to midtown to a property with land on it. Price per square foot can vary dramatically if there is different, factors between, location and size and lot size, quality of finishes, all that kind of stuff. And then of course, price per total square foot. One thing though I want to point out is look how many homes, actually had, I'm going to go A to Z here and I'll delete this. Let's go Control Z. Before I jump into that, I want to show, let's see here, the average. Okay. So median reduction is $15,000 from original list, or 2.33%. So on the median for any home sold between $575,000 to $675,000, which was 34 homes in October, you're going to see a 2.33% reduction from original list to sale, and a total price per square foot of 223, and a total finished price per square foot of 260. Now, I do want to show this because this is kind of interesting, and I've got some graphs to support this, and specifically when clients ask us, what should we offer? At this price point, there's still a fair amount of negotiations going on, but nowhere near once it passes that second weekend. So once it gets past this second weekend, 10-day mark, you're starting to see a pretty significant negotiation and or price reductions and subsequent offers. So that's one thing that I'm going to show here shortly, but there's still plenty of homes that are selling at original list price with no concessions, above list price. And it's really dictated upon when that home came onto the market and when does it get its first offer. Well, how about $800,000 to $1 million homes, which only 17 homes sold in Fort Collins during that time? They do have a fair amount of more big reductions from original list because they can sit on the market for a long time. Our median sales price, that's going to be where the most activity is. That's where there's going to be the most buyers are. But additionally, what I do also want to show here before you get in that, 27 days till offer median on an $800,000 to $1 million home, $38,000 or 4% discount from original list to final sales price, including concessions, with a price per square foot of $234 and $239 for a finished price per square foot. Now I'll delete these two really quick. One thing I did want to point out is how few of homes had concessions comparatively to our 575 to 675. Those 575 to 675, affordability is the key word. And a tool to drop that affordability is by interest rate buydowns, saving on closing costs, things of that nature. When you get into this $800,000 to $1 million price point, those considerations aren't nothing, but they're less than what they are at a median sales price. So people are more concerned about purely negotiating original list to final sales price. All right, now the fun one. Here we go. Okay. This is a scatter chart that looks at the total discount versus the days till offer. We get asked a fair amount from our clients, like, what should we offer? And we kind of go through a goal scenario with them. I was like, all right, well, what's your goal? Do you want this house? Do you want it tomorrow? Because here's where I see is we kind of look at percentages, which we will look at here. There's two graphs for each one. This is the 575 to 675. But obviously, if you offer full price in this market, if there's a situation where there's potential for multiple offers, which is few and far between, it could go into a multiple offer situation, but very unlikely. From there, if you offer full price, more than likely the seller's going to take it. The 1% to 3% off of list price, you're hoping that they just kind of sign it, especially if they've been on the market for a week or two. And then from there, 3% to 5%, expect a counter. That's the conversation. Expect a counter if you're 3 to 5% off, and you can kind of go from there. 5 to 10% off, depending on how long it's been on the market, you are hoping for a counter. And then more than 10% off, you're kind of throwing a dart in the dark, and seeing what sticks. That's not to say that from original list price, it's not going to happen, because as you can see, specifically when you look at percentages, which is a very similar graph to that, but just specifically percentages, you can go north of 20% off if it's been on the market for 100 days. Understanding what the seller's motivations are is critical to making an offer, and understanding like what their motivations are and negotiation willingness is. You can see as we're really closer to that, days on market, days to offer, and that first 7 to 10 days is absolutely critical for a seller. But as you start to scoot on, the sellers are more willing to negotiate. So, there's an easy trend line in here that we could put where, you could have, if they've been on the market for 75 days, you could be between 7.5 to 12.5% off and expect a, negotiation. Most houses aren't getting to that point. So that's one thing to consider too. You either have to be patient. That has to be your goal that you're going to look at. But let's look at additionally the next one, which is the 800,000 to $1 million. Very similar chart on kind of that trend line. The longer the home sits, the more from original list price they're willing to go. And then percentage, same thing, north of 20%, almost 30%. I don't want to jinx it because it hasn't closed yet, but we have got a phenomenal deal under contract right now. We were extremely aggressive, and I'm going to go through some different kind of strategies and theories as a buyer and seller in this market that will hopefully help you, especially if you're working with us. We'd love to work with you. Obviously, we're licensed real estate agents, and producing this content to provide value, but also hopefully you guys are interested in working with us. That would be great. Okay, screen share is off, and now it's going to be kind of moving into the anecdotal side of things. So I asked my team, I said, so we've got a team of, what do we got? 6 agents, and 2 admin, with another one potentially coming on. So we'll see what happens there. But we will do about 75 transactions this year. We are very involved in the Northern Colorado real estate market. We are having conversations on a daily and weekly basis about different things that we're seeing, negotiations, conversations like that. So I asked my team in 2 or 3 sentences, what are they seeing in this market? I think Connor's got the best. If you know Connor, he is sneaky funny, and the more you know him, the more you get to know him, the more you understand he's pretty hilarious. Here is his. In November 2025, the Northern Colorado real estate market is basically behaving like a polite house guest. It's still here, somewhat in demand, but it's stopped hogging the spotlight. Inventory is creeping up, and buyers now have a little room to breathe, while sellers can't justify flinging up a house, buy my house kind of price tag and expect a bidding war. So whether you're buying or selling, think of it like showing up to a potluck. Price it well and bring your best dish, because the competition is showing up too. Caleb came in and said, right now buyers have more negotiation power than they've had in years, with many homes closing below list price. Even though affordability remains tight, those who are ready to purchase are finding real opportunities. All that said, sellers still have pretty solid equity, so they can move when needed. But the market feels more balanced than a competitive frenzy of the past few years. So what is my advice to buyers and sellers? Buyers, especially, part of this is with your agent. So, hopefully they are doing this, but do your homework on the property and seller. When did they buy it? Have they refinanced? What type of price reductions have they done? Understanding the dynamics of original list price to final sales price and how long it's been on the market. All of that combined kind of basically builds a deal box for you to help you understand how you should make an offer, how aggressive you can be or should be, depending on what your goals are, of course, as a seller. Yes, thank you. Found the new channel. We live, new channel. We are going on YouTube. So appreciate you finding me. Here we go. Have your agent call the listing agent to uncover the seller's motivations and tailor your offer to fit their needs. If you can go cash, quick close, or flexible timing, meaning you could close in 60 days with another 60 days post occupancy, if what they need is flexibility to go find their next house, their negotiations might be a little bit more flexible than they would be if you're like, hey, listen, my job starts in 45 days. I've got to close no later than 30 days, and I need in for a couple of weeks to get my family set. Then they might be a little bit, less inclined if they themselves then have to go find a short-term rental and then, a short-term place. They'll probably still negotiate and take the deal potentially, but maybe not as much of a discount as you would get if you were more willing to their timeline. Cash is king, quick close. All that is dandy. You can get a phenomenal deal. I am going to tell you guys about this deal that we worked on. It is something that I'm very proud of and proud of my client and friend for taking on. So come December, I will tell you guys all about it. Pay close attention to the total days on market. It correlates to your negotiation power. We talked about that a little bit. On the first weekend, expect competition. If you like the home, chances are someone else will probably like the home too. So when you ask me, what should I offer? I get back to that kind of goal parameters of 1 to 3%, 3 to 5, 5 to 10, 10 plus. But ultimately, if it's the first weekend, it's just going to be hard, for a seller, unless the motivation's there, to make too big of a move. So, yes, there's probably some wiggle room in the market that we're currently in, especially if it's like, there was one time in October of 2023, I put a property on the market up in English Ranch, and that was one of like 7. And interest rates were near 8%. Homes were just sitting. So I can tell you, sellers were more motivated to move because they're like, I've seen Johnny's house sit on the market for 4 months. I don't want to be in that situation. Sure, I'll take your 3% off of list price and another 1% for concessions to buy down your rate. Done. So it depends on those dynamics, but I would say if it's the first weekend, it's probably going to have some other eyeballs. If you like it, chances are somebody else likes it too. After 25 to 50 days on the market, that's when real negotiations happen. And that's honestly like if you are open to a project or renovations, or just understand that these sellers really missed the mark on pricing up front and sat on the market. And now it's kind of like, well, they might have missed a lot of dollars, left a lot of dollars on the table, but that's when real opportunities for negotiations are going to happen. Still very, very strongly believe that if your timeline to live in Fort Collins, Northern Colorado, wherever you're living is 5 to 10 years, buying is a great option. If it's less than that, and you're concerned about buying, yes, I would say renting is probably, more up your alley. If you have a philosophical desire to buy a house and you're going to guarantee yourself in there for 3, 4, 5 years, and you might be there longer. Okay. Yeah, sure. Go ahead and buy a house. But otherwise, it is a long-term play. Like, don't see this as a flip opportunity unless that is your business. I always talk to people about fixing and flipping. I'm not a big believer in it. Unless you control the labor and or materials, you are paying market rate, and it is a scary game to be in. Sweat equity, man, that is one of the best things that I could recommend is put some time into your house. All right, seller advice. Price your home to sell. That is it. I talked with you guys about this last month, but I sold my condo. I had it on my books, valued at $265. I put it on the market at $255. Yes, $250 or $255. Yeah, $255. After 1 week, I dropped it to $245. Got an offer. Agreed to the negotiations. Sold it for a little bit less than what I had on my books, but fortunately had a lot of equity in it. So it still made sense for me. So I moved forward. I priced it to sell. Your first 2 weekends are absolutely critical. If you don't have an offer after that, plan on cutting your house price by 3 to 5% minimum if your goal is to move it. Of course, hopefully you come onto the market priced well, but if not, I would say the first 2 weekends, if you don't have an offer, it is very clear that you are not in the right price, because the market is talking to us and is saying, there are buyers out here. There are active buyers in the market, and they are looking for the properties that are priced well in a good neighborhood, good area, all of that. I will say there's a couple of stories that I want to talk to you guys about, but there's some things that you can't control, like your location. Like if you already bought this house as a seller, you're in this location. If you're on a busy street, you got to adjust for that. Your neighbors. There is some, I would hope if it's a owner-occupied house, hopefully you've made friends with your neighbors. If it's an investment and you've been a slumlord of sorts, it could come back and bite you in the butt. We had a property that absolutely, there was a buyer, and I quote, "We are bringing our offer to you on Friday after the buyer's dad sees it." I got a text from them on Thursday. Buyers had walked around the area, knocked on, talked to some neighbors, and the neighbors scared the living daylights out of them. It was a fix and flip house for a client of mine who does a great job on his flips. Everything's permitted, does a great job on this. And there was concern about how the fire started. And there was some, theories out there of that. And it killed the deal. So it was something to where I'm not suggesting if you're fix and flipping that you go and you talk to your neighbors. But if you do live there, I've represented properties where there are just some nosy neighbors and they get out there and they can kill a deal. Which on the flip side, if you're a buyer and you have the time and you're able to go and talk to a couple of neighbors, I think that's a great strategy. How's the neighborhood? If it's in an HOA, how's the HOA? Doing a little bit extra steps as a buyer. Some of my most successful clients have taken the time to do that. So if you're able to and desire to do that, I think it's a great strategy. Again, focus on the 3Ds: deep clean, declutter, depersonalize. Curb appeal matters. Exterior, doors, landscaping, entryway, making sure it's inviting. Smells are absolutely non-negotiable. We have lost deals because of smells in a house. If you got to do it, do it. Replace your carpet, repaint your house. Get rid of the smells, especially if it's like an unwelcoming pet odor. One thing that I've done as a seller, and some of this information is like, hey, listen, we're kind of entering the slower season. So this is the perfect time to start prepping for a sale in the spring. But one thing that I've done over the last year, and I'll do it again this year, is getting a handyman in just for a day's work. I track what projects need to be done in my house. Like we had a crack in our concrete and I wanted him to fill that crack in the concrete. And a lot of these are just small miscellaneous items, but they kind of add up. We've seen sellers and owners of houses that have lived there for 5, 10, 15, 20 plus years that have just really, you learn to live with it. You kind of almost become house blind. But if you're really diligent about it and intentional about kind of keeping these things up, it won't come back to you in the time that you're trying to sell. And then it's just this hill that you can't climb. So schedule a handyman, once a year for a day, 2. If you need a contact, I'm happy to give that to you. Let's see here. And then the last thing is, again, first impressions matter. Get on the market, price it well, and move from there. So that is my real estate market update. I'm going to stick around for a couple of minutes if you have any questions. If you found the new channel, Fort Collins Lifestyles, we are going to be going live every Tuesday at noon. We are going to be going live once a month on the first Tuesday of each month for a real estate market update. It is an election day, so get out there and vote. If you have any specific questions about any of the information that I shared with you today, feel free to reach out, send me an email, text, DM me if you're watching this on Instagram. But I appreciate you watching and have a great rest of your day. Go out and vote. All right. No questions on YouTube. Done there. Have a great day.